So without wasting any time, we will just start on the chart. Let's suppose we were having one demand zone here. Okay, on weekly we will mark it out like this. We will mark it body to week. Okay, this body and this week. So what happened? Now I will explain the entry criteria in this setup. You have to just mark the demand zones where demand zone and supply zones where maximum 3 base candles are included in the zone, not more than that. So if you can say, you can mark this as supply zone. Yes, you can mark this as well. I'll just keep it here. It was broken that time. This one is also a little demand zone. It worked, but I will just show how you have to get entries at this demand zone, this type of demand zone or supply zone, whatever. But here in this kind of demand zone, we will see how we will take entries. So we have marked this demand zone on weekly. Then second thing we have to do is switch to lower time frame. For weekly we have 125 and 75 minutes as our lower time frames. Okay, so here if you will see, there are multiple demand zones over here. Some are here, one was here, second one was here. As of now I am not including any trade score for these demand zones, just marking over here. One more thing, just consider those demand zones who are having less base candles than 3, or you can consider a zone having 3 base candles as well. So these 3 demand zones on 125 minutes we have found. One is here. This also you have to mark body to week. This one, and this one. These 3 demand zones we have found. So the thing you have to do is consider only those demand zones which are coinciding. Here if you see, our weekly demand zone area is this. Okay, this is our weekly demand zone area, this only. So coinciding demand zone is only this one, this 125 demand zone. Okay, so if you will ask me, can we consider this? So we won't consider this demand zone, and this demand zone as well we won't consider. Okay, so I'll just close this, exit. And what is the next thing we will do is just wait for hitting that demand zone, wait for the price to hit that demand zone. And one more thing I just want to include is this one thing. I have added EMA 5. If you have to add, just add EMA from here, type moving average exponential or EMA, and click on it. It will get added here. Initially it will be 9, but you have to edit it as 5. Look, okay, it will get added like this. This blue line is our EMA. So the thing we have to look for is when the price hits this higher time frame demand zone, that is weekly or anything any demand zone which we will be considering as higher time frame demand zone. Here in this case, our higher time frame demand zone is weekly. In that demand zone, we have found this execution demand zone on 125 minute. We can consider on 75 minute as well, but if we have found on 125 minute, which having number of base candles less than 3, that is enough for us. So no need to switch to 75-minute demand zone. So now, how we can capture this move? Which move? This move from this demand zone to this. This is our question right now. So how we will going to find this entry? What we have done till now is mark higher time frame demand zone, then lower time frame demand zone as well, which is coinciding with higher time frame demand zone, and having base candles less than 3. Here we can say only one base candle is there. Only this green candle is our base candle here. Okay. So next thing, just wait for price to hit this 125-minute demand zone. Once the price hits here, see this candle hits the demand zone on 125 minutes. Then you have to mark those base candles or those candles which are not touching the EMA 5. You can see first candle is also not touching the EMA. So you have marked the high and low of that candle. Okay. Again, 1 minute. I will lock this so it will not move. Again, you can see another candle has been created that is downwards to that previous candle. So you have to consider another candle and leave the first one. If there is only one candle, you can mark that one. And in this case, we can see this base candle is created and which is not touching to EMF 5. Okay. So at this time, we will consider this candle. We have marked the high and low of that candle. Then again another base candle has formed, or a candle form which is not touching EMF 5. We have to consider that candle. So the thing is, we will wait for the high of this base candle or the candle, any candle which has not touched EMF 5. So we will wait for high of that candle to be broken. Okay. So here that high got broken and your entry got triggered. Here once the high got broken, you have to enter at that point. Here if you see the high got broken here, directly gap up happen in the market. Your entry has triggered and your target should be 1:3 at least. So in this case, it has moved so far, but it will not going to happen every time. So just for safety purpose, we will keep it as 1:3 risk per reward. If you will see, and you can say that market has gap up, and you won't guess that it will come that down. You can directly enter at the opening price of that day and keep the target as 1:3. As simple as that. So considering another setup, I'll just open trading here. 1 minute. I have marked another trade here on Bitcoin as well. A minute. I'll just show here. So what happened here? I have marked this demand zone here. If you see this demand zone, we have followed our rules. Our rules are simple. Just okay. Just consider those demand zones only on higher time frame. Our higher time frame is 15 minutes here. Okay. Oh no, sorry. So 15 minutes is our higher time frame here, and we consider these as base candles. There are two base candles in this zone, two exciting candles. This is legal. These concepts I will discuss later, but still two base candles in this zone. Then switch to lower time frame. Our lower time frame will be 3 minutes as per rules. So if you will see, there are multiple demand zones over here, but we will consider only that is coinciding, or that is at least at near this higher time frame demand zone. So I have marked this as our demand zone. I will color it differently, so you will get to know. I have marked this as demand zone. Opacity I will increase. This demand zone I will consider. Okay. Now that is simple. And here if you will see, and one more thing, you will say that this candle has touched our execution time frame demand zone and moved here, and also it was not touching to EMA 5, and still you have not considered this candle as your entry point. Okay, so if you will see, the gap is very less, and most of the times you have to consider the base candles or the doji candles. So most of the times I will ignore this type of big moves. Otherwise, what happens is we will not get that risk per reward that in that trade. More, so it is better to ignore such candles which are big in size and very close to EMA. If you will see the difference, another candle got created here, which have hit the demand zone again, closed here, and the distance between that candle and the EMA 5. Okay, consider EMA 5 only. That is larger. Once you will mark that candle, you can mark with square as well. Okay, so wait for that candle to close. I'll mark like this. Wait for that candle to close. Okay, that candle closed, and then another candle has broken and our entry has been triggered. Just keep your SL below that base candle, and the target should be 1:3. Keep it as 1:3. Here you have hit the target. Okay, 1:3 here. Or if you will say that sometimes you want take proper entries and wait for the candle to break, and keep your target around 1:3. So it's just now when we were marking this, when we were marking on this chart, it has given our target from 1:3. So that's it for this setup, and just back test and see the results. Thank you so much for